Really excited to have this panel on the institutions are here, what's next. Kristen just introduced everyone, so I won't have them give their whole background again, but just briefly say your name and what is your connection to Solana.
Hey everybody, I'm Teddy. Great to be here. What a beautiful venue, very cool. I'm the president of a company called Bitwise Asset Management. And my most direct connection to Solana, besides loving the people and the Policy Institute and the blockchain personally, is that we issue and manage the largest Solana exchange-traded fund on the planet.
Ryan Rugg, head of digital assets for Citi's TTS business. Nick and I go way back. We've been collaborating for quite some time. He recently partnered with my old firm, R3. So excited to be here. Thanks for having us.
I'm Greg Xethalis. I'm the general counsel at Multicoin Capital, which was the company that led the first 3 rounds of investment into Solana back in the day. Also a board director at the Blockchain Association with Kristen and the DeFi Education Fund with Miller.
Matt Horne, I'm with Fidelity Digital Asset Management. I lead the business development team there as well as some of the product work. And we are an issuer of a Solana exchange-traded product that we launched last November. Happy to be here.
So the current administration has done a lot to help make crypto more accommodating here in the United States. What's one thing that is still preventing you from doing more on-chain today?
Yeah, I can take that one first. I think that what we'd like to see is clarity go through. I'd be interested to hear Ryan's take on this, of course, being from such a large institution. But I think the sense that we get is a lot of the larger partners and institutions that we work with, while they're very optimistic, excited, hiring, staffing out, building plans, maybe the next thing before they actually start implementing some of the plans that they have will be this sort of sense of finality or confidence or future-proofing that can come from more comprehensive legislation. So that's the first thing that I'd say.
And what are you pointing that at right now?
We're optimistic. We're very optimistic about where things stand, and I think that's sort of what we're hearing from the Policy Institute and others. But there's a little bit of nervousness, I think, as the calendar continues to tick forward.
Ryan?
Yeah, you know, it's been wonderful to see all the progress we've made in the last year and a half in this space with Genius and, you know, everything going through and the clarity, because we don't operate in the gray zone, right? So unless there's not only legislative clarity, but like regulatory clarity, like we don't ask for, you know, forgiveness, we ask for permission. So it's clear, it's for us and our enterprises too, to understand what's permissible and what's not, to really start to scale. And I do agree, that's probably what's holding back some of the larger enterprises because of the uncertainty out there. So I think that, you know, again, a lot of progress has been made in the last year and a half, and I look forward to having more.
So with respect to Genius, what is your view on rulemaking and what we need to see for banks to have more comfort around?
A lot of them have issued guidance. I mean, like, so it's definitely progressing forward in a very positive way. And again, once you have kind of those swim lanes to understand like what is and what is not permissible, helps large enterprises like myself as others to start to scale in this space. But you've definitely seen a lot of progress there too.
Yeah, I think about it both from a VC perspective and also my old private practice. I actually represented all of the other 3 institutions only directly with Teddy before on the panel, but did some work. And when you're representing financial institutions and they're trying to engage, whether it's through ETFs or other products, it can be very difficult. So Clarity and Genius provide durable frameworks, but we're also seeing a lot coming out of the SEC. Just this morning, we saw new guidance that related to whether or not non-custodial interfaces would be deemed brokers if they if they allowed people to, in a self-custodial way, interact with blockchains on digital securities, tokenized equities, tokenized debt, what have you. And this was really important guidance that was released today, but it was guidance that will self-expire in 5 years because the SEC is going to be doing rulemaking. And, you know, a 5-year timeline, it's not exactly, you know, Ethan Hunt, the exploding, if you take this mission, but for the first time, the rulemaking is not mission impossible. It's getting done And that is what is going to allow the institutions across the river, to come on chain and really start building products that are exciting and worthwhile.
Yeah, I mean, rulemaking always helps. We look forward to ongoing discussions with regulators, of course, but I still think inherent in this space is going to be operating on the edge of ambiguity and unknown and just taking measured risks. I think that's how a lot of firms in this space just are going to have to operate, in the near term, and that's fine.
So, there are chains out there that are, there are chains out there that are making a lot of noise around privacy. How important is privacy to you when it comes to blockchains?
I think it's very important for the future of our industry, of our space. It's one of those things where it can be hard to measure its importance in the moment. When you're building, when you're trying to get excitement, when you see what the capabilities are, and you can move fast to get things done in a way that you couldn't before, and it's a bright, light, shiny object, it's often not until you're further down the path that you realize, oh my gosh, in today's world where everything is so connected, where everything is available on the internet, where everything can be looked up after the fact, how much privacy matters. And I know there's a number of interesting projects that are working on that for Solana. There's a strong movement within policy circles for people to have the philosophical conversation about why privacy is not just for bad things to get done, why it is important right for individuals to have when transacting. And so I worry a little bit that gets lost in the excitement of certain moments, but I also have a lot of confidence, and I'm very positive that the industry will work on that and we'll get it done.
Ryan, I might ask you to give a historical lens on that, since you started your digital asset career at R3. Obviously, they've pivoted and are now part of the Solana ecosystem, and you've done work at Citi both in your private network as well as public-ish networks. What is your view?
Yeah, and, the need for privacy hasn't changed. Like you think about why R3 and Corda was born. We had 65 different banks that were all working with us to build solutions. At the time, we were building on public chains, and they're like, this is not fit for purpose. And so we went out and did our Series A and raised $127 million to build a private permission chain. And then I think about what happened when I went to IBM. Then I went to IBM, and we were building a solution called WeTrade. Some of you may remember it, for a trade solution. And at the time, IBM and Maersk owned it. And none of the other entities would go on to it because they didn't have confidence that their data was going to be protected. Ultimately, ended up failing. And here, also at Citi, we're on a private permission chain. We take that our clients' privacy, scalability very serious. So it's like a lot has changed, but a lot of what the enterprises need have not in a decade.
Yeah, I think the only thing I would add is that blockchains are a technology, and that technology can be deployed in many different ways. You don't need to be a private permission chain to facilitate the type of confidentiality that is desired, nor do you need to be able to provide some of the transparency that allows us to get more comfortable with some of the regulatory questions. So it cuts both ways, where permissionless networks are a very powerful tool to develop systems, and the technology that can be deployed on them, whether it's your back-end stack where you're not putting everything on chain, or you're using really interesting technologies like token extensions to facilitate compliance functions. All of this can be done. Some of the world's leading privacy-enabling technologies and confidentiality technologies are being principally driven by the blockchain, whether it's ZK Snarks or FHE. We're seeing a lot of development that will start in blockchain systems, but migrate to traditional finance, whether or not they're still connected to blockchains. So it's an exciting time.
I would just add, as fiduciaries, you want the ability to kind of control the level of privacy and dial it up or down based on the use case. Transparency is fantastic. It's unlocked a tremendous amount of potential here with our financial system. But at the same time, clients do expect the ability to be private if they want to be. So definitely a healthy debate going on and interesting solutions being built, and we're watching. So.
And Nick, just another component of that, which we're struggling with on the regulatory side consistently, is the understanding that privacy is inherently a good thing. And it's been tainted by a variety of Justice Department actions that targeted technologies that could be abused because they promoted privacy, could be abused by some bad actors. But the base case, you heard it here on this stage, is privacy is a core component of our financial system, and we are one of the only governments in the world that actually considers it a constitutional right. So getting it right starts not only with the technology, not only how we implement that technology, but also how we argue on the policy side and make sure that we can meet our national security needs, our client needs, with the technologies that are available to us.
I think just to add to that, I think Greg makes a really good point, because I think on the policy side, it's very important because it's a communication challenge. How many years, for those of us who have been working in crypto for a long time, what you hear from people in DC in particular who are not really paying attention to the technology or really grappling with these types of more philosophical questions before you get into the technical implementation of it. It's like, well, isn't crypto used for money laundering, or isn't it used for terrorist financing? So you have to really thread the needle in terms of the way in which you talk about privacy and communicating the understanding that we believe it's a right in this country, right? We believe that privacy to transact is a positive thing, that the government doesn't get to see everything that you do all the time. And so I think it's a really important communication priority for policy groups.
React to this statement. There will be one chain to rule them all.
It's like the Lord of the Rings. I think no. I think there will be different use cases, different chains, different assets, different reasons that you would use those chains.
No, I definitely agree with that. And I feel like it's like the .com era, right? Are there going to be hundreds of chains out there? Likely not. But you're natively seeing different use cases evolve on each one, right? You're seeing some DeFi use cases, some throughput issues. So I think that you could have multiple chains. I don't think you have hundreds. I think there's a small amount of them that actually do it. But I could see definitely multiple. I mean, we already see it. Interoperability is so key, even within the banking ecosystem. I think about we're on a private permission chain now building a Citi token, but no one wants just a Citi token, and we fully recognize that. Our strategy is to build a multi-bank, right, multi-currency, multi-border, always-on solution, and we recognize that. So there's going to have to be interoperability within permissioned ecosystems as well as the public, in my mind.
Yeah, I mean, I think the default answer to the question is there clearly are going to be more than one chain, because Bitcoin is a special snowflake that will always have a place, but it also is one which will not change and adapt to allow all of the things the people in this room want to build. So I do believe that historically crypto has faced significant technical challenges. The first among them was the Oracle problem. A blockchain is the only place where absence of evidence is evidence of absence, at least in the case of Bitcoin. And we solved the Oracle problem of pulling off-chain data on-chain through systems like Pith and Chainlink and what have you. Then we had the bridge problem, where bridging across chains, getting interoperability is one of the biggest security weak points of our ecosystem, but we've built better and better systems to address that. And then we have speed and the ability to scale and serve the world's population for financial services. And this is where we've seen things like FireDancer and Alpenglow that are making Solana the most performant chain in the world, and the ability to have transaction volumes that are enormous. And we're seeing also in EVM land, people trying to build high performance chains as well. So, the technology is evolving. We're not Halloween 2008 when Satoshi released the Bitcoin white paper. We're in an era of blockchain that was built for institutions.
Yeah, I would just add, we always strive as a firm to meet our clients where they are, whether it's in a branch or online or wherever, or now on chain. So I just think naturally you're going to have some clients that might have a preference for one chain versus another. So you want to be interoperable and have the ability to serve them as an asset manager. So multi-chain world.
So I'm of course biased. I think Solana's amazing, the best thing ever. But if Solana is the winner, why is it the winner?
Yeah, I think speed, iteration, listening to what users who actually use the software want and iterating from there. Those are the things that I would think of when I think about Solana, right? Like when I think about what experience with Solana is, particularly for those of us who have used other blockchains, it's like, oh my gosh, this is like a pleasure. This is a delight. This is a joy. It moves quickly. You can interact with it seamlessly. That's why Solana will win. I believe Solana will be one of the winners. I think there will be a few winners, but that is why, in my mind, Solana will be one of the winners.
You know, we're on a private permission version of Ethereum right now, but we're constantly evaluating the chains out there because we have to, right? The different use cases that are coming, the different need for throughput, like, you know. So we've done a lot of due diligence on various chains, and Teddy, kind of, you said it, from like a throughput and speed, there's no one really else out there from a comparison. You know, I can't speak personally because we're not on Solana, but from our analysis, that's what, you know, and as our use cases evolve, I imagine that we could potentially have some, like, you know, opportunities to collaborate.
I'm going to answer it a weird way. We think about maxis in the crypto environment. A Bitcoin maxi is someone who believes that crypto should just be a UTXO, a store of value that can be transferred in a permissionless way anywhere. Oftentimes, an Ethereum maxi thinks about, I need to be able to validate transactions on the Raspberry Pi in my basement. A Solana maxi is someone who believes that the mission of building a great chain is to continue to make it more and more performant and to meet the customers where they are, the users where they are. If Solana wins, it's the maxi culture of Solana being distinctly different towards making the chain better every day.
Yeah, I mean, if it's battle tested, showed it can handle vast amounts of throughput in dynamic situations, and it's going to be a winner. The least of which I think maybe Nick's activity will be the reason Solana's the
Definitely not. It's thanks to everybody that's here that Solana is great. But so let's talk about the future of asset management, and we'll get to banks in a minute. Obviously, banks play a role in asset management as well. What does the future of asset management on chain look like?
Yeah, so the thing about chains, we're talking a lot about what the future of our space could look like. The thing that blockchains enable is to do things in an automated way, to do them transparently, and to do them in an auditable way. And a lot of what happens in asset management is what I just described. And so from our perspective at Bitwise, we believe that our whole industry is going to live on chain in the not too distant future. So think about all the things that you can do in the physical space of running funds, organizing funds, setting up rules, setting up access, setting up governance, trading, settlement, creating financial statements, doing reconciliations, getting price feeds, distributing financial statements, managing risk on certain parameters. All of these things can happen on chain. It's like it's the classic thing of like the future is here, it's just not distributed yet. Like, can you do it at scale? Can you do it in a way that fits within the regulatory environment right now? Are there enough humans in the world who understand how to do this right now? No, the answer to all those questions is no, not yet. But to me, it's one of those things where the future is sort of obvious that all of these things are going to happen on chain in the future. And so when you talk about like which chain can handle that amount of throughput, speed, customization, need to change things when you run into a roadblock with the current architecture, those are things that I think the Solana community can solve.
As an asset manager, I would just say it's going to change a lot potentially. Like, we're going to continue to serve our clients the way we do today while still building for this future state that looks less intermediated, more direct. It's global, it's 24/7, it's fractionalized. It's very exciting for what could be built here. It's super scalable. So asset management on chain is going to be quite compelling industry to be in, I think.
And I think just general securities markets, I always go back to the July 31 speech by Paul Atkins last year, the Project Crypto speech, American Leadership in the Digital Finance Revolution. He brought out a ticker tape next to him. And he talked about brokers pushing security certificates in carts down the street over across the river. And he said we moved from that by going to street name. And we moved from that by starting to have electronic brokers. Moving it to the blockchain is an opportunity to take that to the next level, because we can have the speed. A blockchain is ultimately an identity system and a messaging system. And it, if done properly and with rules of the road written to allow us to bring the securities markets, whether private securities, whether it's a private company or private fund, public securities like ETFs or standard equities, there is a path for blockchain to make the system more efficient. And we've seen success in some markets. Figure with HELOCs has done remarkable in making servicing and the availability of home equity lines of credit a lot easier and more accessible to the American consumer market. And Paul Atkins has the SEC staff charged with changing the rules to allow for us to iterate and try to do that with the broader securities markets.
But let's not be remiss, like asset management on blockchain is not new. Like I see Todd over there, like literally 10 years ago, we were tokenizing bonds and equities and like you name it, mortgages and highly liquidify, HQLA. Like we were doing a ton of this stuff, but I think what was missing was cash on chain. We always had to go back to the TradFi rails to settle, and what this technology is really good at is atomic settlement, DBP, right? That instantaneous, like, so you're moving away from having, a cash account and an investment account to having a wallet, right? Where you could have multi-assets in that. And so you think about the advent of stable coins and CBDC and tokenized deposits. So you were always missing that part of the equation, and now you've seen asset managers going, and I think the way I like to think about it is you're moving up the curve. Like if you can't tokenize cash, which is arguably one of the most simplistic assets, how are you going to do it? And then you're moving up to CP, and then you're moving up to tokenized money market funds. Like the complexity of the assets are starting to move up also, and I think, but that cash piece was missing in the early days, and I think that's why you're starting to see more traction amongst the asset managers now.
Totally.
And that cash piece and the tokenized money market piece is going to revolutionize collateral management. And I still call that the Trojan horse for the asset management industry in crypto. That is where the ball is going, and it's because of Genius. It's because of the banks being able to do tokenized deposits. It's because of institutions pushing out tokenized money market funds. That is where we're headed.
Yeah, and I think the meta thing is just that the old architecture is wrong for the internet age. The old architecture that's built on a facsimile of people walking up the street with a wheelbarrow full of stock certificates is basically what we still have with DTC and with these account structures and different accounts and correspondent banks. The technology of a blockchain being the messaging system and the account system is what works for the internet. And so that's why I think this change in all of our financial services is so obvious, is because the technology's architecture lends itself to it. That's the thing that I think a lot of people haven't seen, and some people have seen. I think the new administration in Washington sees that, and now we're finally able to make a lot of progress towards that goal.
But institutional and technological inertia takes time. I'm still amazed that it was only 2 years and 4 months ago that FedWire shut down their facsimile desk. People used to send wires by fax in 2023.
Crazy.
All right, so last minute of the panel, I'm going to do some quick fire questions. Today we're at $30 billion of real world assets on chain. Give me a number for where we are at the end of the calendar year.
150. It really depends on legislation regulation for us, where that's going to scale and how fast enterprises adopt this technology. Because, I take our tokenized deposits, for instance, we obfuscate all the complexity for our clients. They literally, Citi Token Service is a drop down in a UI. They don't have to they don't have to manage a wallet, they don't have to manage keys, host a node, nothing. And even so, they're well, our treasury management system is still batch settlement. So it's we can make these grandiose estimates, but it's this takes time.
I left my phone in there, and I'll defer to Kalshi.
Higher, how about that?
Higher.
Yeah.
Okay, stable coins or tokenized deposit?
Stable coins.
And I don't think it has to be a either or. We have partnerships with Coinbase to do stable coins if our clients want to do it. We're also building tokenized deposit solutions. I don't see why it has to be an either or.
Ryan, with the nuance. This is supposed to be quick fire. All right, Greg.
All right, one word answers.
Both plus tokenized money market funds.
Yeah, and I'd say you have money at rest, a yield-bearing instrument, money in motion, stable coins. Maybe that's one way to think about it.
All right, public or private?
Oh, public, public.
Private, because I don't want to say one word.
Public permissionless, baby.
Generally public, but some private use cases will emerge.
All right, there you heard it. Clear answers from everybody. All right, thank you so much for joining us today, and thank you all for coming.